Welcome back to How to Retire. In this episode, we're going to talk about paying for long-term care. Before we get started, let's start with our quote for the episode, which is, "I've reached the age where my back goes out more than I do." We all know as we age, certain things aren't going to work the way they should. They're not going to work as well as they did in our 20s and 30s and 40s. It's just a fact of life. And so one thing that we have to think about needing in the future, hopefully in our 80s and our 90s, hopefully we don't need it before then, is something called long-term care. Now, what is long-term care? It refers to needing help with everyday activities. It's also, the financial lingo is ADL, and that stands for activities of daily living. Now, these activities include bathing, dressing, grooming, using the toilet, eating, and moving around. Getting up out of your bed and moving into a chair. If you're not able to do these, then financially in this type of world, that means that you qualify for needing long-term care help. And so that's what we're talking about today. Unfortunately, a majority of people over the age of 65, and these, the most recent study I saw said 65% of people over the age of 65 will need long-term care at some point in your life. There's a number of studies on this, so that number might range depending on which study you look at. But the reality is a majority of people over the age of 65 are going to need this help at some point in their life. However, you've got to answer a couple more questions to really drill down into, do you need long-term care insurance, and how are you going to plan for this? The first question you have to ask is, how long are you going to need that care? Another question you need to ask is, what type of care will you need? As you know, as you can imagine, we can't answer these questions, when you're 65 and healthy, about what you're going to need at 85 or 90. So these questions are unanswerable, and we just have to plan as best we can and think about the different contingencies that you might go through in life, and then just make sure we're adequately prepared for the good happening, which is not needing long-term care at all, and for the bad happening, which is you might need long-term care for many months or even many years. And so let me share two examples from my own family that kind of illustrate the different ranges that you might need towards the end of your life. My grandmother, Patricia, she actually needed long-term care help for over 6 years. She was confined to a wheelchair. Her mental facilities were all there. That was great, but physically her body was breaking down. Her and my grandfather did not have long-term care insurance, and the cost out of pocket for her to stay at home to get the help that she needed, 18 hours a day or so, was over $200,000 over that 6-year period. On the other end of the spectrum, my father, he got sick and he was in the hospital for a couple weeks, and then he passed away, and he did not need long-term care at all. And so this is both ends of the spectrum. You're going to pass away so quickly that we don't even need to worry about long-term care, or you're going to pass away of something that's not related to needing long-term care, or you might need this type of help, for many, many years, and then you could rack up a really significant bill. So what types of long-term care service are available? The first one is the one that my grandmother had. This is the one that I know most people would prefer, which is at home. You get to stay at home, you get to enjoy, your community, and you just have someone come to your house and help you with chores that you can't do yourself, or it'd just be so much easier. They can cook, clean, run errands for you, depending on what you need. Maybe they can help with medication and obviously their qualifications. Do you need a registered nurse? Does it not necessarily need to be a nurse? Those are all nuances that really depend on your specific circumstance. But yeah, ideally, if we need long-term care, most people really want it at home, and then you can, hire someone to come on and help you provide those services. The next level of help is a community or assisted living facility. And so this is a community-based approach that offers health and therapeutic services to people who don't need help around the clock. So it's more than what you would need at home, but you don't need 24/7 care. And you can do a lot of things in a group setting that makes the price honestly much more affordable, and we'll go into prices on the next screen. Last type of service is a nursing home, and this is for people who really need high levels of care. They offer room and board, supervision, help with medication, rehabilitation, etc. So think of this as someone who just needs a lot more than someone who cannot stay at home. They're not, physically or mentally able to do that. They need more individualized assistance than some kind of community-based program, and so they go to a nursing home where they can get, physical or mental help that they need to be able to, live a good life. So let's talk about the prices associated with long-term care at home. And the numbers that I pulled up are a national average. You can actually find, and Genworth has a great tool with this. Just type in Genworth long-term care pricing, and they're going to help you specify what the average pricing is in your zip code. So I just did the national average. At home, the national average is to hire someone for $26 an hour. Maybe there's a minimum number of hours that you need to pay that person per week or per month. That's so individualized and so specific to those providers. But that's a pretty good rate to pay someone and get the help that you need and be able to stay at home. I think that's really affordable for most people that I'm aware of. Community and assisted living facilities, these are going to cost more because you're living there, and the monthly cost for them on a national level is $4,500 a month. And then again, the most specific individualized services are nursing home. In a shared room that you share with one other person, the monthly cost is $7,909. And if you want a private room all to yourself, it's $9,034. Again, Southern California, Northern California, some parts of New York, Connecticut, those places are going to have a much, much higher national average. So at least from what I've seen, the cost kind of corresponds to your location in terms of, is it going to be higher or lower than the national average? So definitely want to take a look at your zip code. Go on Genworth Long-Term Care, just type in your zip code and then just see what the average prices are so you can just get a rough idea. Okay, we are moving on to how are we going to pay for this long-term care? We have two types of insurance policies, and then I'll throw out a third option. The first type of insurance policy is just a traditional long-term care insurance policy. You pay a monthly or annual premium for a long-term care policy, and it's going to operate like your auto insurance. It's going to have stated benefits that if you need long-term care, maybe over your lifetime, you're going to have benefits up to $250,000, $300,000, and then it's going to have monthly maximum that you can take out as well. So maybe it's $5,000 monthly that you can use your insurance policy for to help pay for these long-term care needs. That's so specific to the individual insurance policies. So those are general things that I see in a lot of policies, but it's going to depend on what provider you look through and your specifics of your health and whatnot to see what they offer. But you want to see the total benefit that they offer you. You want to see the monthly benefit, what's the length of the policy that's going to last, and obviously what's the premium. Now, these policies are use it or lose it. So just like auto insurance, if I pay auto insurance for all of 2023, I don't get in an accident, I can't call up the auto insurance company at the end of the year and say, hey, can I get my money back since I didn't get in an accident? It doesn't work that way. Long-term care, if you pay for it all throughout the year, you don't lose it. You don't use it, then you lose the premiums. I mean, you just don't get it back. And that's kind of how the way that works. Some people did not like that structure, and so the insurance companies created a new policy. I guess it's not new for 2023, but maybe 10 to 15 years old, and it's a hybrid policy. And so basically it combines long-term care insurance with some type of life insurance policy. And so let's say you have a policy and your stated long-term care benefits over your lifetime are $300,000, and you don't use them, and you obviously keep on paying the premium. When you pass away, instead of that $300,000 of long-term care benefits going away completely, whoever you named as your beneficiary is going to be able to receive that $300,000 as a form of life insurance that they receive upon your passing. Also, if you, let's say you use 100,000 of that 300,000 stated benefits that you get from your policy, if you use 100,000 for long-term care, and then obviously 2,000 is remaining, and then you pass away, then your beneficiaries get that 200,000. So that's the way the hybrid policies work. As you can tell, I mean, since you're getting more of a benefit, since you're getting since you're getting a life insurance benefit at the end of it when you pass away, the annual cost, the premiums are going to be higher on the hybrid policies than on the traditional policies, as long as it's apples for apples comparison, because you're guaranteed to get something out at the end of the policy. The last option that we have to pay for long-term care is out of pocket. Maybe you have some extra cash lying around. Maybe you have some investments that you've done really well and you haven't depleted your investments too much at the end of your 70s, 80s, and 90s. Or if you have some serious home equity that you can use to pay for the event of needing long-term care help. But before you do that, we've got a lot of questions to consider. The first one is, what's my family's history? Your mom, your dad, your grandparents, anyone else in your family, have they had any illnesses or diseases later on in life? Do you currently have anything going on with you health-wise that's going to make you need long-term care more than we might assume? Definitely something to consider. Another question we have is, do we have enough assets that we actually need insurance? Some people, don't have much in the way of assets or investments. In those cases, honestly, I'm not positive a long-term care insurance policy with the cost that it's going to be. And I don't want to quote you on that. You got to look it up to see, exactly what it's going to be for you and your family. But if you don't have too much in the way of assets, it may not be worth it to buy a long-term care policy. On the other hand, if you have so much in the way of assets that you're not going to run out of money in your lifetime unless you do something really dumb, which of course you're not going to do because you're watching these videos, and if you have so much assets that you're not really worried about depleting it, and you can really afford, like my grandmother, that situation, if you can afford paying 100, 200,000 out of pocket for long-term care, if you ever get there, then maybe you can self-insure it and just pay for it yourself when we get there. Another question to consider is, what are your legacy goals? Some people are really adamant that they want their kids or some kind of charity to receive 100,000, 200,000, at their passing. Other people are perfectly content with, hey, I've done my best raising my kids. They're capable adults, and I'm going to spend my money on myself. If you have the latter approach, which is, I'm fine, not leaving much in the way of a legacy in terms of money when I die, then, that actually might mean that it might lower the odds that you're going to need long-term care insurance or need to purchase a policy, because you're less insistent on, having money left over. And so it wouldn't be as big of a hit to you emotionally and psychologically if you did have to pull out a big chunk of change of your net worth from some type of account to pay for long-term care. But if you are adamant, no, I've got to leave 100,000 each of my 3 kids, then we've got to figure out a way where we can maybe not guarantee, but really increase the odds of you being able to leave that dollar amount to each of your kids and each of your beneficiaries. In which case, we'd want to lock in the max that you would pay for long-term care, and we could try and do that through some type of insurance policy. I hope that makes sense. Another question that you need to ask is, what's the pricing and the coverage for your specific health circumstances? It's going to run the gamut for everyone. I typically find it best to run quotes in your 50s, mid 50s, or early 60s. The longer we wait, just the exorbitant prices are going to go up and up and up. The last thing that we have to remember is that ask ourselves is, am I okay with premiums rising over time? These policies, unlike a term life insurance policy, these long-term care policies do not have a flat annual premium that does not change. These premiums will rise. If the insurance policies have too many claims, and if they need to make adjustments so that they can, stay in business, they're going to do so, and they're going to send you a letter in the mail saying, "Hey, we're increasing your premiums." And so you've got to, mentally and obviously financially be okay if you buy a policy with these premiums potentially rising in the future. Okay, so let's do our recap for long-term care. First thing is that there is a really good chance that either you or your spouse, one of you, is going to need long-term care at some point in one of your lives. What we do not know is how long you're going to need that help, how much that help is going to cost you, or the type of care that you're going to need. And those all kind of play into each other about, if I need to stay at home and I need someone to come help me at home for 6 months, well, we can probably all pay for that out of pocket. But if you need to stay in a nursing home for 3 years, that's a really big bill. And so that's just an unknowable thing about your health and what's going to happen with you. The last thing that we need to remember in our recap is that these insurance policies are getting more expensive. They get more expensive as you age. And just on a general annual inflation basis in the US, they're getting more expensive every year. I'm really not confident that they're going to get cheaper. So if you see a premium that gets quoted based on your individual circumstances, you've got to account for that going up and just see if that makes sense for you to do that. And the last thing that I have for you is if you do self-insure, you need to have assets that grow enough to cover these extra expenses. And so when I talk about assets that grow enough, I'm especially referring to assets that grow above the rate of inflation, which the last 100 years has been 3%. So we need investments that grow above 3% so that we're making a net gain on our money after inflation and our distributions, so that we've got enough money in the tank in our 80s and 90s to pay for anything out of pocket. And I am specifically talking about, stock index funds. And so if we have, again, as I said this in the last video, if we have too much in the way of bonds, we're not going to get enough juice from our investments. Most likely that's going to be able to outpace inflation in our distributions. So if you do want to self-insure, you really got to hone in on what percentage of stocks you have in your overall portfolio. Okay, that's all I've got for long-term care. Thanks for watching. I'll see you in the next video.